Shut up and sit down.
And now, streaming live from the sunny Southern California coast, this is Options Uncensored.
Hey everybody, I'm Steve. Welcome to Options Uncensored. We're making real option trades in real time together. Let's get right into it. First things first, make sure you have your brokerage account open so you can follow along. Have your YouTube video quality set as high as possible. That way you can read the numbers a whole lot easier. Have a calculator on hand so you can do some easy math. If you have a question or a stock you want to go over together live, leave it in the comments section below. And finally, remember, this is not financial advice. This is all for entertainment purposes only. All right, good morning, everybody. We have a lot to go over, but we'll take our time and make sure everything is clear. We have 3 positions that closed. 1 this morning and 2 yesterday, so we'll go over those in a second. There's a T-bill auction this morning. We'll go over, just ignore that. We have our 2 open positions. We have a short call spread on the semiconductor ETF, and that one is a little underwater, but we've got some time on that. And we rolled our short call spread on XBI. It's a biotech ETF. We just got to hang on tight for this one, okay? All right, positions that have closed. First one's do Delta, DAL. We sold a short put. We sold the 35 short put for February, okay? And Delta is up big. Some pin action from American Airlines' earnings this morning, so Delta's up with it. Sold the 35 put, made $16. That was an easy one, okay? I think we sold it the day after earnings on the 16th. Kind of moved around here and then it's moved up in our direction. Position's been filled. We also had yesterday 2 positions closed. First up was XHB. That's the home builder ETF. We sold on the call side the 100 and bought the 104. So that was a $400 wide call spread, short call spread. So we sold the call spread, moved down in our favor, so it filled yesterday. I can't remember when exactly we opened it, somewhere in early to mid-January, okay? And we made $25 on a $400 spread. So if you do the math, that's 25 divided by 400. That's 6.2% return on this call spread. Great. Okay. And that was for February expiration, I believe. And our other position that closed yesterday was our Morgan Stanley short put. So I think on the day of earnings, so on 16th, when they gapped down and moved down, we sold the 77.5, that's right about here. We sold the put, and this was a March expiration, okay? So we sold the 77.5, and it moved again, as you can see, up in our direction post-earnings. Made our money. We made $34. There's no math to do on that one because it was not a put spread. It was just the put on its own. So we made $34 there. So around $100 clearing the last 24 hours. That's not bad. Cool. All right, let's move on. We have a lot to go through today. A lot of earnings that came out yesterday and this morning. Most of them are going to be duds, but let's see if we can find any winners like there was with Morgan Stanley and Delta, okay? First up will be Tesla, TSLA. They're down big so far this year. Since January 2nd, down, and then down again today, post-earnings. We had this channel forming. Oops. We had this previous channel here. Now we have another channel forming. So, if we move this line here, it could be getting close. It could bottom out around 161, 162. Okay? So, what I suspect will happen is it'll have a down day today, obviously. And over the next couple of days, it'll have maybe a couple downgrades or price target reductions. Will bring the stock down further. And I'd say somewhere around 160 to 160. It's hard to say. I don't know. 176. Anywhere in this area could catch a bounce. Okay, so let's keep an eye on Tesla. If you're a little trigger happy on the put side and want to do something today for March expiration, if you sold the 155, You could buy the 150. Let's do the math on it. Very good liquidity here. 2-cent spread here. 4-cent spread for the 4-cent spread for the entire put spread. That's not bad. 232 minus 177 divided by 2 divided by 500. 5.5% there. That's not bad. Keep this one on the list. Getting close. Just going from 212 down to 195. Let me do some quick math. Give me a second. 212 minus 196. That's 16. 195. 196 minus 16 and 80. Drop here. 212. Okay. Somewhere around 175 could be the first bounce, okay? So just hang on tight. Mark Tesla will come back later this week, as in tomorrow, if not Monday, okay? Next up is IBM. The 90s are back. IBM is rallying today. I never thought in 2024 I'd say IBM is rallying. So, I'm not sure when their last high was. No joke, we may have to go back to the early 2000s to see when the last high was. Look at the weekly chart here. Okay, yeah. Last high was in 2013. So resistance right about 192 here. Points of resistance are 192, 195, and then finally at 200. And these are resistance points from back in 2013. All right, so go back to the daily chart here. On the call side for March, if you sold 210 and bought 215, let's do the math there. Actually, nah. To a liquid, the 210 strike has 118, 132. Liquidity is not the best. There is some volume here, so that's good. But to a liquid, actually the 205 strike has better liquidity than the 210. And as you get down here for covering the call that you shorted, less and less volume. There's some volume here at the 230. That's probably these guys covering their spread or some dumb people trying to buy out of the money calls that are going to expire worthless. If you buy these, they're going to be duds. Okay. Interesting on IBM. Next up, STX post earnings, I believe, the 24th after the close. Looks like there's not a lot of movement after earnings. If anything, sell the call side. Nah. Let's take a look on the call side really quick just for fun. If you sold the 97.5 and bought the 100, or sold the 100, bought the 105. Let's do the 100, 105. You see how there's red on both sides. The calls and the puts have both lost money today. It's because it didn't move far enough after earnings. So these are both losers today. You would have wanted to open this before earnings. Let's just skip this one and move on. Next. Las Vegas Sands, LVS. Post earnings. Again, seems to be a nothing burger. a raise to buy from hold. Let's check out. So it opened up at 51.50 and is already sold off, so we missed the move there. Let's take a look at Win. Waiting for Win to get up here at the 200 day. It's getting closer. But the earnings may be coming up. February 7th, Win earnings. So let's wait till after earnings on Win. And then we'll do something there, hopefully. Okay. Next up, NEE, Nextera Energy. Earnings were today before the open. Low volatility. Not much movement after earnings. This one, same thing, will probably be nothing. Good liquidity. Put side if you sold the 52.5. Good dividend on this one, 3.2%. Something to keep in mind if you're going to sell the put side. Call side. Skip the call side. So on the put side, if you sold 52.5 and let's take a look. Where's 52.5 on the chart? $52.5 is right about here. For March expiration, that seems fair. There's no, not crazy about this one. Let's move on. Let's look at some of the airlines. American, they're up big today, 8%. The problem with this one, now that we're post earnings, it had this big move up, then a big move down, and now it's just hanging out here in no man's land. You know, it's just, there's no clear direction here. It could continue to move up, or this retracement, 200-day, all this stuff continue to move down. So there's no clear direction. It's hard to make a trade either way. Maybe on the call side. Skip the call side. 13, skip the put side. Let's move on from American. Let's look at Alaska, ALK. They had earnings as well, up 4.5%. Here's a chart. A little worse for them. They had a big move up, then the big long move down, and kind of hanging out here in the middle. If anything, maybe a bias to the upside. And it's, again, no clear direction. Look, the strikes. Illiquid too, not enough volume. So let's move on from this one. Love LUV, that's Southwest. Their earnings were the 25th before the open, so they're done too. Oliver writes, do you ever sell condors? Sometimes you say no clear direction on the chart. Wouldn't selling the call spread and the put spread make sense then? Yeah. So couple things here about selling condors. So let's go back. Let's take a look. What's a good one? Let's go back to American AL and look at them. So if there was no clear direction on the chart, like I said, so move up, move down, just hanging out here in no man's land. So if you wanted to sell the condor on this, if you sold the 13 and bought the 11, and on the call side, sold the 18 and bought the 20. On this one, liquidity is good. But if it moves in a direction against you and into the money, especially with larger stocks, let's take something like, let's go back to Tesla. Okay. So if you sold on the call side, the 220, the 225, and it moves against you, it becomes more and more illiquid, okay? But your put side is farther out and liquidity stays. So if you sold the Condor, you've got 4 strikes, all right? So if you get into trouble, say this becomes really in the money and you want to try to roll it, you're now trying to roll 4 strikes at once. Like when we roll this, we had to roll 2 strikes. It was just a call spread, the 200 and the 205. Trying to roll 4 strikes and getting them all filled is really difficult sometimes, unless you're trading like the SPY or something that's really, really, really liquid. If you get into trouble, closing it becomes very difficult, rolling it becomes very difficult, all right? So as things go in the money, they become, there's less volume here, like there's 2 contracts here at this strike. It becomes difficult to close and becomes difficult to roll. So the less strikes you have, the easier it is to close. Like for this Delta put, the bid ask is 7, 8. The bid is 7 and the ask is 9. It's a 2-cent spread here. This is very easy to close, very easy to roll, all that good stuff. You don't have to worry about it. When you sell condors and you get into trouble, it's a pain in the you-know-what to manage, okay? Plus, since you have no directional bias, you don't really care which way it moves. So if it moves up or down or just stays in the same place, it's not that exciting. When you take a side, like when you sell a call spread or you sell a put, you're hoping for a direction in your favor, and that kind of makes trading more fun. Like I sold the Delta put, I'm hoping that it goes up. You know, that's part of the excitement of trading. At the end of the day, this is all very, very boring. Looking at these numbers, doing math, trying to find liquidity, trying to, you know, it's all math. Looking at all these numbers, it's all math. It's very boring. At least I think it's boring, especially after you've been doing it for so long. To take a directional bet makes things more exciting. Like if I sold puts here, every morning I wake up hoping it goes up just for fun. If I just sold the Condor, I don't want it to go up or down. I just want it to stay where it is, and that's not very fun. So I do like taking directional bets just to make it more fun, more interesting, okay? Good question, though. I would only sell a Condor for something like SPY. I'd stay away from it. Like something like an airline, which becomes very illiquid as you get into the money, I'd stay away from it. Good question, though. All right, next up. Humana, HUM. Down 13% today. It's dropped below support here from January 2022. Next stop for support. Should we get some good support around 341, 342? Let's look at the put side. For March, you'd have to go out to you'd have to sell the 315. And this one's fairly priced. A little bit of low volume. I don't know. Skip this one. Let's take a look at UNH. They're down because of Humana, down 5%. Their earnings are April 12th. So this may be a better play here. Jesus. Let's look at UNH put side. Liquid enough? Not really. There's no strike that's liquid enough. Close. This would have been a good one because they're down just because of Humana, and UNH is a better company, so you'd want to sell the put side because of it, because these guys will probably be up tomorrow. Just there's nothing you can do. All these are too illiquid. Maybe the 450. Maybe the 440. Again, if you get into trouble, it's going to be hard to manage. And volatility is very low now. Actually, a little bit heightened. IV ranked is showing at 0. Let's go on. BX, Blackstone. Reported today, up slightly. Here's our chart. Gap up, selling off a bit. Maybe on the put side, if you sold 110, you paid 100. That's not bad. Good liquidity here. Good volume here at the 110 and the 105. These are put sellers. Call side, you'd have to sell 135 and buy 140. What do you get? 119 minus 51 divided by 2 divided by 500. 6.8%. The 135 is a little close. Where's 135 on the chart? Yeesh, nah, too close. Right up here for March expiration. That's too close for comfort. I'd rather sell the put side on this one. It's not bad. Selling the 110. We'll come back to this one at the end of the show. BX. Next up, VLO, Valero. Earnings were this morning, up slightly. Again, no clear direction on this one. On the call side, if you sold 150, bought 155. Actually, no, skip. The bid asked is 21 cents here, 19 cents here on the 150. Skip the call side. On the put side, 120 is what you want to sell. And this one's fairly priced. Where's 120 on the chart? Nah. 120 is right here. And for March expiration, that seems a little too close for comfort. Next, let's look at Dow, DOW. Earnings again this morning. Not a big move either. This is probably going to be a nothing. Again, just range bound, no clear direction. Not a big enough move on earnings. Put side is fairly priced at the 50. Call side, the 60. Nah, skip the call side. Let's move on. Let's look at DuPont from yesterday. Think they got a downgrade today? I can't remember. They had the big down day yesterday. Could have sworn there was a downgrade somewhere. But their earnings are on the 6th, so that's coming up soon. We're going to have to wait till after earnings. Big move down yesterday. If you sold puts yesterday, you're already on the right track. Too illiquid, though. Okay? Moving on. NOC, Northrop. They must have had earnings down almost 8%. Whoa. Interesting on this one. Earnings are today before the open. Not a lot of volatility, so this is probably priced in. You could rationalize selling the put side here. Should get support around 421. Very close. Let's look at the put side for March. You'd have to sell either 400 or 395, and look at how low volume you have here. So that's no good. We need higher volume, which makes liquidity a lot better. So we're gonna actually, it's not bad. If you sold the 400, you're just not getting paid for the risk you're taking. Where's 400 on the chart? 400's down here. And again, 400's down here. Could it get there in the next 45 days or whatever? How many days till expiration? 50 days. Can it get down here in the next 50 days? Absolutely. So this one's very fairly priced. I wouldn't sell any puts yet. What I would do, because you have this channel forming, you have a high here and then a lower high here, and then you had support here that was broken down here. So you have a downward movement. You'd have to wait for it to get to around 407. You see support from back here, 408-ish. Between 400 and 410, you've got some support. So I would wait for it to break down to around 400 to 410 before selling the puts. Maybe we'll follow up on this one in the next couple days or so, okay? Don't want to jump the gun on this one, but puts, maybe we'll get some downgrades or something over the next couple days by some dumb analysts, and then sell some puts afterwards, okay? Moving on. Sherman-Williams, SHW. You don't talk about this one very often. Big move up here, like everything else, from 234 up to 315. This is a paint company. Pull back slightly. And earnings this morning, but not much of a move. Low volatility across the board. Let's take a look really quick. You'd have to sell the 270 on the put side, and your spread's too wide. So skip this one. Next. NEP, that's the other Nextera. Up 7%. Raise their dividend. That right? A 13% dividend? If that dividend is right, it's probably going to get cut sooner or later. That's too high. We have an ascending trend line here. Ascending trend line here. So selling puts would make sense, even though it's up 7% after earnings. I don't know if I'd want to sell the call side here. A little bit of volume here at the 22.5. Got 27 contracts. And put sellers. Call side, you'd want to sell the 35, but you got to buy the 40 to cover it. It's a little liquid. The 40, that is. So, put side here, 22.5 makes sense. Just sell one of these straight out. And if you get assigned, keep some of the shares. It's got a good dividend. But remember, something's wrong with this company. High dividends like this means something's wrong. Not a good company. Okay, next up. Mobileye, MBLY. Earnings were this morning before the open. Not much of a move. Well, something must have happened a couple weeks ago where the move was already priced in. Maybe they pre-announced their earnings. Okay. Low volume here at the 23 on the put side, so skip that. Call side, 33, do you want to sell? Same thing, low volume. Okay. UNP, rail. Earnings were today, I'm guessing. Yeah, today before the open, down slightly because of it. Not volatility is very low. On the put side, low volume here. The 225 call side, 255, same thing, low volume, 10-cent spread here. If this thing goes against you and went into the money, look at these spreads here. Very low volume, very wide spreads. So back to Oliver, to your question about condors. If this thing went against you, it'd be really hard to roll if it went into the money on either side, on the put side or the call side. See how there's no volume here? If your condor goes against you and you have low volume, it becomes a nightmare to manage. Okay? Next up, Comcast CMCSA. Up 5% today, post earnings. Here's our chart. Good bounce off the 200 day a couple times here. Bounce up, bounce up, bounce up again off the 200 day. Good upward momentum. You'd have to sell the call side at the 50 and you don't get paid for it. Let's skip this one. Let's do some follow-ups. Let's look at Wayfair again from earlier this week. Earnings on the 22nd. That's right, we've got this channel form. We got this ascending trend line here and a descending trend line here. If I had to guess, I would guess a breakout to the upside. Today's the 25th of January. Earnings are about a month away. I don't know. Good liquidity on this one. Very expensive on the put side. If you sold the 40 and bought the 35, let's do the math. 139 minus 62 divided by 2 divided by 500, 7.7% if you sold the 40 and bought the 35. Call side, if you sold the 70 and bought the 75, that's 204 minus 100. Is that right? 204 minus 145, sorry. Divided by 2, divided by 500, 5.9%. So we got some put skew here. You make the case for selling the 40. Where's 40 on the chart? 40's down here. This is March expiration, so we got 50 days to go, and you're also holding through earnings. I think at this point, hold on. We're gonna hold on Wayfair. Following up on Netflix, NFLX. Second day after earnings. Anticipating some resistance around 568 and 580. 568. It's right about here. Almost got there yesterday. And 580. Let's look at the call side. Any upgrades or anything today? Today's the 25th. DZ Bank upgrades Netflix. We got some upgrades today. Let's look at the call side for March. If you sold the 610, then bought the 615, 610, 607 minus 532 divided by 2 divided by 500, 7.5%. That's nice. Where's 610 on the chart? 610 is right about here. Awfully close. Let's keep an eye on it. If it continues its move up towards, say, 600 or so, Then we'll sell the call spread. But let's hold on this one for now. Let's wait. Could get some more upgrades tomorrow or Monday, all right? 3M. Was waiting for it to get down to 91. Got close. Got down to 92.75. We'll continue to wait. Looking for a bounce around 91 or so. So it had 2 down days, an up day. Downward direction could continue. Waiting for downgrades. Nothing in the news today, so perhaps tomorrow. If we can get a downgrade tomorrow and it opens down towards 91, then we'll go ahead and sell some puts on 3M. Good dividend of 6.5%. All right, cool. Anything else? That's it for the list. Let's go to our IV rank scanner and we'll sort by volume. AMD on the 30th. NVIDIA on the 21st, so we're less than a month away. Well, let's hold on that one. IWM still up there at 57%. Let's take a look. Just by looking at the price action, looks like the downside. We had that big move up at the end of the year, pull back slightly. But every day it opens up, it sells off. Again, no clear direction. On the put side, if you sold the 181 and bought the 176, that's 134 minus 87. 34 minus 87 divided by 2 divided by 500, 4.7 on the put side. I'd skip the put side there. On the call side, if you sold 210, the call side's perfectly priced here. Sell the 210 and buy the 215 or the 216. Let's look at the 216. It's 155 minus 78 divided by 2 divided by 600, 6.4% there. So something the call side makes sense here. Where's 210 on the chart? 210's right here. For March expiration, 50 days out. There's going to be a lot of resistance right around 210. That's why it's priced that way. You've got, if the IWM can get up to 210, I'd sell call spreads then, but we got to wait till then. I wouldn't sell the call spread yet. We're at 195. We'll put IWM on the list. If we can get a good rally up there, we'll sell it. IWM at 210. Put that in your notes, so keep an eye on it. Okay, next. American, we already looked at. IBM, already looked at that one. Boeing, I think Boeing got another downgrade today. But we got to wait for earnings at this point on the 31st, okay? Amazon on the 1st. Google coming up. Intel. Today's the 25th. So today, after the close, we'll get Intel. Apple and Microsoft. Rivian on the 21st. Meta's coming up. FXI. That's the Chinese large cap. Let's take a look. FXI. We missed the bounce on the put side earlier this week. Has heightened volatility here. We got this blue line higher than the yellow line. IV rank according to E-Trade is 75. IV rank here for the 30, what do they have it at? 70. So yeah, we do have some heightened volatility here in the FXI. The put side for March, if you sold, you'd have to sell the 20, 25, or the 20. You just don't get paid for it. On the call side, uh-oh, what happened? Sorry. There we go. On the call side, if you sold the 20, sell the 25 and buy the 27, 32 minus 9 divided by 2 divided by 200, 5.7% there. Not crazy about that. Let's move on. Baba is at 50%. Pfizer's on the 30th. PayPal on the 7th. Got a lot of earnings coming up here. Palantir on the 5th. SoFi on the 29th. Carvana, let's check out Carvana. Their earnings are probably coming up. CVNA. Expensive. $79 for the 25 put. Earnings are on the 22nd, so we got just about a month, a little under a month away till earnings. We got some time here. Here's our chart. You can make a... It's already caught support from back here on the 17th and moved up, but selling off. So this support's not gonna, couldn't hold anymore. Next spot for support is at 34.35. So you got the 200-day coming up and support from back here. So maybe a little bit more movement down to 35 and then sell puts. But by that point, we're getting really close to earnings. Put side, if you sold the 25, that makes sense. It's going to price in some volatility from earnings. See how expirations before earnings are lowered, and then this is probably, you have your earnings here, what, on the 22nd, I said? So the February 23rd expiration has high volatility. This one, this one, this one, and March as well. And after earnings, this will all come back down to the mean, the 30-day average. Okay? So yes, these are expensive, but we're not in the right space to do anything right now. Ford on the 6th. Lucid will pass on. Upstart on the 13th. Earnings. Southwest we already looked at. Spirit's on the 8th. JetBlue's on the 30th. Chevron. UNH we already looked at. Dow was this morning. We already looked at that one. Roblox on the 7th. We're too close. Block is on the 22nd. Getting a little close on that one. Humana. Down big today. We already looked at that. CVS on the 7th. XBI, we're in our trade right now. Let's hold on that one. Western Digital, 25th. That's today after the close. We'll follow up tomorrow. Pass on JD. Oxy on the 14th. EFA. Let's take a look. EFA. I don't know this one. Doesn't look like there's a lot of volatility in this one. sell the call side. I don't know. On the call side, if you sold the 78, got some good liquidity here. Look at the strike of the 77. A lot of... Let's maybe hop in on that one. Sell 77 and buy 79. Let's do the math. 52 minus 14 divided by 2 divided by 200. That's 9.5%. So a lot of volume here at the 77. It is a little close. You get paid for taking that risk. Where's 77 on the chart? This might be a winner. 77 is right about here for March expiration. Okay, maybe I sell the call side on this one. I like this one. Just to be clear, this will be a call spread, and the 77 is very close, okay? So let's keep that in mind. We're going to sell the 77. Hop in on this one, whoever did this one. Sell the 77 and buy the 79. Go to verticals. $77, $79 right here. Okie dokie. 42 divided by 2. It's 21 divided by 200. That'll be a 10.5% return on this call spread. Okay, we're going to sell one March expiration of the 77 call and buy one March expiration 79 call. Limit credit, and we're going to go for the ask of 42. Preview this. Double check our ticket. Sell one March 77 call to open and buy one March 79 call to open. Receive a credit of 42. Actually, hold on one second. What is this? Morningstar EAFE ETF. Let me look this up really quick. EAFE. Mid caps for developed market equities, excluding US and Canada. Exposure to broad range of companies in Europe, Australia, Asia, and the Far East. Who says the Far East? All right, that's fine. Let's go ahead and go with this one. Just want to make sure I know what I'm trading before I open the trade. Okay, reviewing the ticket. Sell one March 77 call to open and buying one March 79 call to open. This is a $200 spread, so you're risking a total of $200 minus the credit of 42. You're risking $158 to make 24. All right, go ahead. Receive a credit 52. We'll go ahead and send this one out. It'll hang out here. 42 divided by 2. If this gets filled, we will set a buy to close limit debit good till canceled at 21. Okay? This one's intriguing. A lot of volume here at the 77 strike. And we got a lot of open interest here. Look at all these strikes. Tons of open interest on both sides. Okay? Let's go back to our list. Good find. I'm glad the list recommended that one. I would have never found it. Lumen. ARK. Maybe. Let's take a look. ARKK. Not a lot of volatility in this one. Kind of in no man's land. Could catch a bounce, or it already got this bounce from back here in September of 23. Next stop is the 200-day and 41. If anything, sell the call side, I guess. I don't know. This one's tough. If you sold 53 and bought 56, it's 54 minus 26 divided by 2 divided by 300. That's 4.6. I'd skip this one. GM on the 30th. DraftKings November, December, January, February, early February. Too close to earnings on this one. Caterpillar on the 5th. Qualcomm on the 31st. Cisco, February 14th earnings. Earnings for BP. Earnings for CCJ. GameStop, no. BlackBerry. No. Roku. Earnings have got to be coming up for Roku. We'll wait till after earnings on Roku. Enphase on the 6th. Walmart on the 20th. We're getting still a month away. This is awfully high for Walmart. WMT. Let's look at the put side. If you sold 150, nah, these aren't that expensive. Let's wait until we get closer to earnings. Big gap down after earnings last time. I don't think we sold puts, but should have. ADM, we've got earnings coming up. We'll get some more information on their CFO shenanigans. XLV, still heightened. We just got out of this one earlier this week, I believe. We sold this the call spread and got filled one of these days here. Maybe it was on the 17th or something, the 18th, I can't remember, but still too early to get back in. Sold the call spread right at the top here. Got lucky on that one. Next. Boyle. Looks like we're coming to the end of the list. Walgreens earnings. Actually, earnings were in January for Walgreens. Let's take a look at Walgreens. WBA. Skip the put side and skip the call side. Cleveland Cliffs coming up this week. Sorry, early next week. A couple more of them we'll call it for today. Rig, Snapchat's coming up next in the 6th. Okay. So we got this one open. Let's go back to Blackstone BX. Earnings for today. Volatility's been zapped out of this one. Selling 135. $135 is right here. Nah. If we did want to sell the call side on Blackstone, maybe there'll be some upgrades coming. So move up past this high of 133. Maybe say to 140 or so. Yeah, if it can get up to 138. We'll sell the call side on Blackstone. But for now, I think that'll do it. Don't have a lot of positions open anymore. We had a lot. It's still January. We've had a ton of positions filled in this month. So we've made a lot of money. We had one loss. That's okay. But usually like to have 6 to 10 positions open. Right now we only have 2. So hopefully there'll be a lot more opportunities tomorrow or next week after we get through some of these earnings. We'll get a couple more trades open. If this EFA trade gets filled, we set it at 42. We will set a buy to close order at 21. Don't forget, okay? Delta closed this morning. We had XHB and Morgan Stanley close yesterday. So 3 trades closed in 24 hours. Made around $100 total. Not bad. Yeah, so far so good. I like this year so far. All right, thank you all for watching. Tune in every morning at 7:15 a.m. on the West Coast and 10:15 a.m. on the East Coast. We go live trading options every morning. Also, tell your friends who are trading to like and subscribe as well. That we can build our group and all trade options together. Thanks so much for watching. We'll see you all tomorrow morning.